S&P 500 versus Wahed. What is the difference? Well, firstly, let's look at what's haram versus what's halal. The S&P 500 is not halal. It includes companies that deal with interest. It includes companies that deal with alcohol and gambling. Wahed, on the other hand, selects funds that screen the investments for Sharia compliance. So you only own halal assets. Secondly, if we look at asset classes that the different things invest into, the S&P 500 is just one thing, equities. All your money sits in US stocks, so the top 500 largest US companies. Wahed spreads your money across different asset classes depending on your risk level. Yes, it will include equities, but also potentially sukuk and even gold. So you're not just relying on one type of investment. When it comes to what region are you investing into, as we said, the S&P 500 is all America, 500 US companies, whereas Wahed, you get global exposure. So you may have equities from the US, Europe, Asia, not just one market. And how about fees? That's another key difference. When you buy the S&P 500, you can potentially buy it for super cheap. Think like 0.05% per year. Wahed costs a bit more, around 1.5% per year. But for that, your portfolio is managed and it's screened for Sharia compliance and it's automatically rebalanced. So if you want your money to be halal and invested in a few different asset classes, geographically spread out, one option is Wahed. Wahed and the S&P 500 aren't really competing. They're built for two very different investors.